Let's talk to Connor Campbell. He's a financial analyst for Spreadex. Morning to you, Connor. Right, we've got 3 companies reporting this week. Let's kick off with Burberry. They're up just 5% this year. What are your thoughts?
Yeah, but Burberry had a... Interestingly, this chart doesn't necessarily reflect that, but Burberry had a very, very strong 2017. I think they were up 20% by the end of the year. Despite having, if you look at their wider chart, multiple times they gapped lower. The most recent example being in November. These figures themselves were very strong. I think pre-tax profit was up 26% to 128 million. Like-for-like sales were up 4%. Really, really strong. However, they got a new CEO, I think he's Marco Gobetti. He announced a sort of a shift in strategy. He wants to make Burberry like a super luxury brand. You know, bump up their, they're not inconsiderable prices already, but bump up their prices and obviously bump up their margins at the same time. I think there were 2 reasons why investors were a bit maybe concerned, or I'd say actually 3 reasons why investors were maybe a bit concerned about this. One, Burberry's doing very well already, and I think maybe, shifting that market when you're already posting 4% like-for-like sales is a bit of a risk. I think the cost of it as well, I think it's going to cost, they're going to be spending, I think, 150 to 160 million pounds a year for the next 2 years, and then in the medium term that jumps to 190 million to 210 million. So those are the kinds of figures that investors weren't particularly happy to see. Also, this announcement back in November came nine days after the departure of the creative director, Christopher Bailey, who was CEO before Gobetti. I think the timing of the announcement then, when they haven't actually got a creative director, as well as the risk attached to the move, I think sort of put investors off quite sharply. The day before it was trading at all-time highs. It was tickling £20 per share, and then it plunged 10% on the news because of that shift in strategy. In terms of its figures this week, however, too early really for that strategy to be put in place, especially since it's sort of still, the creative department is still undergoing some shifts. In terms of its figures, I think like-for-like sales are expected to be up 3%. Obviously, I think investors might be disappointed to see a slight dip from the figures back in November. However, in the current economic climate, any kind of growth is positive. So I think, given how sharply it fell back in November, we've seen our clients really heavily buying around the 1775
So there have been buyers for choice.
Yeah, I think because of the strength of Burberry's figures at the moment, I think that's enough for our clients really to still be interested. Obviously, investors are going to want to hear some kind of update on this sort of upper market strategy rollout as well, and what kind of timeline you can expect in 2018. But I think that like-for-like sales growth should be the headline figure, and that's why our clients are buying just below the £18 mark.
Understood. Let's go on to AB Foods. Down 4% this year. Primark.
Yeah, it's all about Primark. Back in November, its half-year figures, the headline themselves were pretty strong. I think reported group revenue was up 15% to 15.4 billion, massive. Statutory pre-tax profit was up 51% to 1.576 billion. So those 2 headline figures, huge. Primark itself, I think constant currency revenue was up 12%. That was largely informed by the fact that I think it opened 30 stores in 9 different countries over that period. Like-for-like sales were up a more modest 1%, but up 10% in the UK, which is massive and shows sort of the high street stranglehold Primark has in the UK, and the fact that, most high street stores suffer in comparison to their online competitors, and that isn't the case with Primark. Primark is just as cheap, if not cheaper, than the likes of ASOS and things like that. And it has a very specific place in the market, I think comparable to Aldi and Lidl in the supermarket sector, and you can, comparable levels of success. However, undermined sort of those very positive figures by, I think it was cautious on sugar profits. Sugar profits were a huge reason why that statutory pre-tax profit figure was up 51%. But it said that production is going to lift off of the abnormally low levels it saw in 2017, so that's obviously going to eat into profits. Plus, it said that it was shrinking or reducing the size of 3 of the 8 stores it has in the US, which isn't necessarily great news given that the US would be the next major market it would really want to take a chunk out of. In terms of our clients, they're buying around that £28 mark. I think Primark's figure should still be strong enough that fall in the final few months of the year was quite sharp. There is room for it to push back towards the £30 mark, and I think that's why our clients are quite heavily buying around the £28.50 mark.
Understood. Let's wrap up this segment with Whitbread, down 3% in 2018 so far. This is all about basically coffee.
It's all about Costa Coffee and what do you do with Costa? Do you spin it off? Do you keep it part of Whitbread? You can see it sort of had a pretty topsy-turvy end to the year. The sharp fall towards the end of October was its half-year figures. Again, the headline figures were pretty strong. I think total sales were up 7.4%. Statutory pre-tax profit was up 20%. Headline figures strong. Break it down, then you can sort of see areas for concern in Premier Inn and Costa Coffee, basically. Premier Inn, revenue per available room, I think like-for-like revenue per available room was up 1.8%, which is strong, but you compare it to sort of the mid-range economy hotel sector growth that was at 3.5%, you can see it's perhaps trailing its peers. But compared to Costa Coffee, Premier Inn was great. Costa Coffee saw, I think, like-for-like growth of 0.6%, which was really sharply down from 2.3% the year before. And even worse was the fact that I think statutory pre-tax profit for Costa Coffee dropped 9.8% due to rising costs and, be it inflationary costs or employee costs, wage costs and things like that. However, then it jumped in December, as you can see, quite sharply because I think it was Sachem Head Capital Management. They revealed a 3.4% stake in the company. That sort of reignited the rumours of will Costa Coffee be spun off in the next couple of years. Obviously, at the same time, Costa Coffee, Whitbread are really pushing into China. They had a joint venture in South China. They've bought the half of that they didn't own. Like Starbucks, they're really eyeing up China's sort of increasing interest in coffee and looking to push into that in the next couple of years. I think in terms of this, obviously, that's all big picture stuff. In terms of its recent figures, I think for the third quarter, Costa Coffee is expected to see a 0.5% drop in like-for-like sales. Premier Inn is expected to see a 1% drop in revenue per available room. That's not great figures. Our clients are still buying around the £39 mark. I think they're perhaps looking at the bigger picture and thinking, okay, well, if Costa Coffee does spin off, that's a decent chunk of change there. Costa Coffee's push into China could pay dividends this year. It could be a successful move. So I think they're looking at the rest of the year rather than this third quarter like-for-like decline. I think I've also read that Whitbread are expecting a better fourth quarter. So if they can release some comments along those lines as well, I think it can maybe stop any kind of decline after its figures on Thursday.
Connor, as always, thank you very much.
Thanks very much.